Hey everybody, I should be up on YouTube. Someone can post the link. I'll start. Thank you, Robert. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Did a bunch of day trades today in certain stocks, but I didn't end up keeping them. Definitely a day where bears really took back control of this market in a serious way. You could argue maybe they never lost control. My swings were abysmal today. My swings definitely really hurt, so I finished down a good bit of money today. But my day trading actually, I worst case scenario was break even on any day trade that I took today. So that actually helped a little bit because otherwise it was pretty tough out there. Almost hard to even point a finger at exactly what caused this market sell-off if we want to put like a news event to it, which I know is a big thing that, financial media loves to do. Sometimes it's just that the bears are in control of this market. They kind of have been since that negative Maribozu candlestick last Friday, and that just continued. Obviously, we saw Bullard come out, and he typically has comments that the market is interpreting as bearish. That was definitely not different today, so that helped weigh on the market. And the other thing was Russia. All week with Russia, we've been dealing with this. They're going to attack. They're not going to attack. The attack is coming on Wednesday. Really just kind of back and forth on that very, all over the place. And today was no different. I mean, by the time the market had even opened, we saw like 3 different moves on Russia news. Right? First, we bounced this morning because they said they were pulling some troops out. Then the opposite news kind of came. Then the opposite news kind of came. Then the opposite news kind of came. It was really ruthless. And I think that it's finally dawning on me, and I think it's finally dawning on others as well, that I had asked myself this question from even going back last weekend. Last weekend, just keeping in touch with the news over the weekend from the ski slopes. They were talking about how the attack was imminent for Wednesday. And I remember asking myself, if I was an invading army, why the heck would I tell the country that I'm about to invade that I'm about to go do it? Hey, today is Saturday. On Wednesday, we're going to invade you guys, so you better be ready. Get all your supplies ready for our big invasion that's about to come. That just didn't make any sense. I mentioned that once earlier this week as well, and now it really seems obvious that what Russia is doing is just information obfuscation. They're just consistently saying all different things to the point where all this misinformation is coming out. So that it is, in fact, no one actually knows if they're going to invade or not, is really what it's coming down to. Because they keep saying they're doing it, they're not doing it, we're putting our troops on the border, we're taking our troops off the border. No one knows. No one knows if the invasion is going to happen. No one knows when the invasion is going to happen. I am still a proponent that in the long run, this is just more noise than anything. And I actually wish I had this chart, but I had the pleasure of teaching a virtual lecture. I was a guest lecturer for a Harvard class last night, and prior to my speaking, I got to sit in on that class, and amongst a couple cool things that were done, there was one chart that got brought up that basically showed the historic market reaction to basically these war type events, and that went back as far as I even saw Pearl Harbor on there and what the market reaction was to it, and basically what the data confirmed is what I already knew, which is that most of these types of events, you know, I'm sure it would be different if someone was invading the United States on U.S. soil, but most of these types of events tend to be very short-lived downside blips on the market. And I've said this in the past, you know, I've traded through a lot of Iraq and Afghanistan. I traded through when Russia invaded Crimea. To me, this doesn't necessarily, at least not yet, seem too different from that. And they always kind of just turned out to be blips on the radar as far as the market went. And the data from that chart from that class really confirmed it. But that doesn't mean that we can't have really slippy, sloppy price action based off that, right? And that's exactly what we're seeing. It's been a headline-driven market this entire week. Russia is working to confuse and obfuscate information, which that makes sense logically. And the market's been all over the place as a result. But I really still believe that the big picture stuff that's really important for this market is inflation, interest rates, and economic growth. So that's what we need to continue to pay attention to. So in that regard, it could be that the Bullard comments are more important than the latest information that was coming out of Russia. But you would almost wonder, everyone knows at this point what his stance is on things. Everyone knows, like, kind of, he didn't, I didn't see Bullard say anything new that he hasn't already said over the course of the last few weeks. Bed Bath & Beyond appoints Minesh Shah to board of directors. I don't know who that is. Is Bed Bath & Beyond moving on that? No. So anyway, that's kind of the big picture news. But our big picture technicals here are certainly no good. So going back to last Friday, right? Well, you know, let's take a step back even further. Let's go back to the low of the year here in January, right? Where we had this, it's not a coincidence, by the way, it is not a coincidence that the low of the year thus far is the highest volume candle of the year, and that we stage a huge bounce off of that. This is standard technical capitulation that kind of came into play here. We were concerned about this bear flag. We had earnings season. We had Apple trying to save the day, Microsoft trying to save the day, Google, Amazon trying to save the day, Netflix and Facebook really kind of being the opposite. But some of those earnings reports helped us get to the high of the bear flag. We broke the bear flag to the upside. From a failed move comes a fast move. That's a very common thing in technical analysis. We ripped from 442, that bear flag break up, to 458 in the SPYs very quickly, to the point where we actually got extended to the upside. So that led to a pullback. This pullback was a potentially higher low, but that higher low only led to an equal high. If this was a new high, it would have been proving some sort of potential reversal here. It wasn't. It was an equal high. So not what bulls needed, right? And then off of that, we had that really volatile day. I remember last week, Monday, Tuesday were a little bit boring on the intraday price action, and then Wednesday we were all over the place. Actually, no, Monday, Tuesday, Wednesday that week were a little bit boring as far as price action goes. Thursday was all over the place. Friday was when we broke down, and that's when a lot of this Russia stuff was first coming out. And this candle here from Friday last week is a really important candle, because this is a breakdown candle. We tried to create a higher low here. We failed, right? And I kept talking about this 440 area, the low of this Maribozu, as being an important area that we don't want the market to lose. On Friday last week, the market kind of closed right at it. So technically, you're nervous here. Next day, we actually closed a little bit below it, but we closed it below it with this bottoming type tail that led to this bounce back to equilibrium. Last 2 days were more neutral, tighter trading sessions in equilibrium, but still below the low of this negative Maribozu. So the way that I've been describing this market is a market that is neutral to bearish, right? neutral, because we're just kind of in this range here. Certainly not bullish. You know, we didn't break the trend, but for the most part, we were still holding above this 440. So it's kind of why I had us neutral, but neutral leaning towards bearish, specifically because this candle from last Friday is a candle that shows bears have regained control to the market. And the only way that we could get neutral to bullish would be if the market gets back above 450. And the only way that we could get bullish would be if the market starts making a new higher high by getting above 458. So those are kind of our key levels. It's a recap of things. But since we could not recapture 450, we were neutral to bearish. So bears are a little bit in control because of this candle. And bears just got their continuation today after 2 days of kind of price correction and rest into the equilibrium zone. And this is now another pretty bad candle. We lost the 440 for sure. Like we were almost losing it here, but it was a tail, so maybe it was okay. We got right back above. Now, for certain, we lost this 440. Our next major support zone is down at 430, and we have the tail of this crazy, crazy day that we had that goes all the way down to about 420. So we'll see now if this breakdown from today leads us lower down to 430 for the market. It sure looks like we're heading that way, but with that said, it's been such a headline-driven market. There's still a situation here where headlines could come out that could kind of bring us all over the place. And I'm seeing Ricky here. Yeah, that's the chart that I was looking at yesterday in the class, Ricky, I believe. So appreciate you posting that in the VTF. So bears regain control today. As far as the intraday price action, I actually day traded a couple of names really well today, and I can go over those names. But I made one really key pivotal mistake that really kind of affects more my bigger picture stuff today, which was that I may have gotten shaken out of it actually, depending upon how I chose to short. But the biggest mistake I made today was not hedging myself into this bear flag here on the market, because I was communicating this flag pattern as it was building out while I was on the radio here on the VTF, that this was just no good. We got really extended off the open to the downside. Right off the open was a bloodbath here, starting on the third candle of the day. We just sold off really bad. You can see it in the Qs. You can see it especially in the IWM. The IWM was a pretty brutal sell-off here. And by 10 a.m., we were pretty extended to the downside for the market. And, usually 10 into 10:30, 10:30 especially, that's when you start looking for more like 15-minute corrections. So it's unusual post 10 a.m. for the indices to be this kind of extended to the downside still on like a 5-minute chart. And I remember noting to the team here in the VTF the inability of this market to gauge a real bounce off those lows as kind of being problematic. Like if we were going to bounce back, we needed to recapture this negative Maribozu here at 9:50 a.m. for the market. And if we were going to bounce back, that bounce should have been a little bit swifter. And it wasn't, man. We just couldn't seem to get out of our way. As a team here, we were remarking about how weak this market looked. And again, that was my big mistake on the day, was not even as I'm calling out that this is a bearish pattern that's coming in. I'm calling out that this is a bear flag. I'm calling out, okay, everybody, the ADMA I literally said this. All right, everybody, the ADMA just caught up to the upper base of this bear flag type pattern. We're probably going to be going lower now, and I didn't act on it. I didn't put any market related shorts on to help hedge my swing positions, and that's really that was my big mistake of the day. And that's definitely why I got hurt a little bit, just because my swing positions, a lot of them were kind of brutal and bled out a little bit, that were to the long side, and I never got those hedges on to kind of help myself. Depending upon what I shorted, I actually still may have gotten shaken out. If I shorted the Qs or something related to the Qs, I would not have, because the Qs never got back above that kind of bear flag high. The SPYs actually did, though. The SPYs would have shaken out. The IWM did not. So depending upon what I would have shorted, and I didn't short anything, I may have gotten shaken out there. With that said, though, kind of the day trading today was pretty on point, and there was some good looking stuff out there early, and eventually the market just kind of got to things and caused these good looking day trades to fail. Baidu was one of my ideas for the morning meeting. Baidu long through, I think it was 168 is where I bought. So this was a really solid trade here. I know a bunch of us were in it. We caught this opening momentum move. The stock looked fantastic. Made a 15-minute correction here that led to a new high on the day. And then eventually the market kind of just got to it. It got heavy. And I got shaken out of the position. And I think my trailing stop, I just kept my trailing stop to here. And I got out of my position here at about 230. So that looked like it was going to be potentially a really nice trade. I nailed this low in AMD. I called out the 5-minute hammer on higher volume that came in. I actually bought in this candle with only 20 cents risk versus this low. Got my risk covered really quickly. 20 cents risk on AMD. I'm always a little bit nervous to take that little amount of risk because the probability of success becomes so low. But that also means that the risk reward is significantly going to be higher, right? I was able to get my kick, and then it gave this great move up, and I was booking some more profit on the way up. And this is another one. Like, it really looked like this low wanted to hold. It looked like I had really good stock here. And then the weakness of the market into the close, eventually this thing broke that the low of the day, and that's where I got stopped out on that one. I never trailed this. I sold maybe 70% of my position here into this up move, and the other 30% of my position I just left my stop at the low of the day, and I got stopped out. My best name on the day and also my best trade was Palantir, and this Palantir is worth talking about a little bit, because I know I was really focused on Palantir early on, and like I said in the morning meeting, this was one of my ideas from the morning meeting. I really dislike Palantir as a company. There was a period of time where I spent a lot of time shorting the stock, which was also difficult because even though it's almost similar to an AMC, right? I can sit here and tell you that I think AMC is worth $4, but if it's on its way to, if it's going from 13 to 70, would you rather be long or would you rather be short? Even if you think it's worth $4, you'd rather be long, not short. So Palantir is a company that I've hated, and I've shorted this plenty of times in the past and have struggled with that short position because the stock had always been so strong. And now here I am actually trying to buy it off of support. So Palantir reported earnings. The earnings were definitely not great, but I didn't think that they were as terrible as the market was kind of pricing in with its gap down. And $12 here is big support. So the $12 area is something I was looking at. I love, and I ended up getting stopped out of this position as well in the afternoon. I was trailing it when it made a new high here. I raised my stop on the position to this low, just following my trailing rules. So I got stopped out in the afternoon on Palantir also. And this is another one where it honestly looked like I had really good stock, but the weakness of the market just totally got in the way of it. What was I going to say about this? Oh yeah, so this is just an example of why I love circuit broken stocks. If you're on Lightspeed, the trading software that I use, you can tell the stock is circuit broken by this CB right here. A stock that is circuit broken means that the uptick rule is in effect, right? A stock becomes circuit broken when it's down more than 10% on the day, and it remains circuit broken for the remainder of that day and the following day. So even if Palantir goes up 40% tomorrow, it'll be circuit broken all day. Not that I'm expecting it to go up 40% tomorrow, just saying that as a hypothetical. It stays circuit broken for the entire next trading session. The cool thing about circuit broken stocks, it means that the uptick rule comes into play, and the uptick rule means that short sellers cannot hit the bid to get short. Short sellers can only short on the offer. So what that means is these red prints right here, those are long sellers. That's someone who owns the stock who is selling it into $11.80 because a short seller, $11.81 at that time. Short sellers cannot actually hit the bid. Short sellers can only get short on the offer in a circuit broken stock. That's what the uptick rule is. So this 4,900 shares here on NASDAQ at 81, that could be a short seller or it could be a long seller. but you know that these prints here are for sure long sellers. So what ends up happening in circuit broken stock is when short sellers really badly want to be able to get short, they end up basically being what's called, traditionally we used to call it a stepping shorty, which basically means it's a pegging offer on the inside offer, right? So you'll end up seeing a lot of liquidity build up on the inside offer, like an unusual amount. And the reason why that unusual amount of liquidity is there, it wouldn't be there if those sellers could just hit the bid, but they can't. The market literally will not let you. It's illegal. So the only thing that they can do is pile up on the offer. So you see all these short sellers piling up on the offer. And then what ends up happening is, let's say that there's enough long sellers that's out there to break this bid at $11.80. You'll see all that liquidity that's on the offer at 81 immediately drop to the inside offer at 80. And then immediately drop to the inside offer at 79. And they will peg the market all the way down on the inside offer until they're able to get filled. So that is how a stepping shorty works. And again, you can't necessarily know with 100% certainty that it is a short seller, but I can tell you with 98% certainty that it's almost definitely a short seller. And that's powerful information, because if I know that someone is short selling here at 81 cents, well, as soon as stock can get to 82 cents, what does that mean? It means that all the people who just shorted at 81 are out of the money. And what do people do when they're out of the money? They oftentimes liquidate their position, which if you're a short seller, liquidating your position for a loss means that you're buying back stock. So what I do in these types of situations, and this is exactly what I did in Palantir today. I actually did it 3 times, and the first 2 trades were small losers, and the third one was the one that really worked, is I was seeing the short sellers on the inside offer in Palantir, and I was putting a buy stop a penny above them. So if this here at 81 is short sellers, and again, it's after the market closes, and it's the end of the day here, so I'm not saying that, this is not the same type of price action as off the open this morning. But if this 81 is all short sellers, I'm putting a buy stop at 82. So the second that there's enough buying that comes in to be able to break the 81, my buy stop goes bam, and it triggers at 82. And what I'm doing, look at this. This actually might be short sellers here. Look at all this liquidity that's going off at 81. That's just not hitting the bid. But then bam, my buy stop triggers in this case at 82. And what is my offer or my buy order doing? It's spraying that market higher. So not only do I know that the short sellers at 81 are out of the money, I am personally squeezing them. I am personally squeezing the people who just shorted at 81 by having a market order basically hit at 82 that's going to take as much liquidity in the inside offer as possible and go up. And the idea, the hope, thought process is that I'm squeezing these shorts. And every penny I can get this stock to move up more and more shorts are going to panic out. And that's going to cause a feedback cycle of buying that can make that stock potentially go. Sometimes that works great. Sometimes the short sellers are so passionate about shorting the stock that you clear the 81 sellers, my buy stop triggers at 82, and next thing you know, all these short sellers are coming back in at 84, 85, 86, and then they start then they start pegging that offer all the way back down, and next thing you know, the stock is making new lows, and I'm the one who's getting screwed, and now my sell stop is triggering and is stopping me out. So that's actually what happened to me. Where's my chart of my executions? I'll just throw this chart up. So that's actually what happened to me the first couple times I bought it. I think I had started with a small feeler here. I'm trying to remember actually. What's this low here? No, that was actually, yeah, I think that this was actually slippage on the way out. My first trade wasn't as big because I was just watching and I was getting a feel for it. But I saw some short sellers. The low was 11 cents. I remember that. And the short sellers, the low was 11 cents as inside bid. The short sellers were at 12. I put a buy stop at 13, and you can see that my buy stop got 14 as an execution price with this dot. And then my stop should go to 10. But I remember here that I was actually giving it a little bit more space, just because I was smaller and I was watching it, and it put in like a new low at 6 cents. And I ended up putting my stop at that new low and getting stopped out at 5. And then I started to watch again. And then it came down and put in a similar situation occurred here. Low was 01, short sellers were at 02. I put my buy stop at 03, and you can literally see my green dot here of me buying at 03. And now I put my, again, I could have put my stop directly at 12, and there was plenty of liquidity there at 12, because that would be where the new low was. So in theory, it shouldn't be able to make new lows. Because in theory, as soon as I'm buying 3, or as soon as I was buying 14 in this case, the short seller was out of the money, and it should squeeze up. But what I was doing was, since the low here was 01, and there was a lot of liquidity at $12, and it's a thick stock, I said, you know what, I'm just going to actually put, I think I put my stop at 99. Right, is there a red dot in there? Yeah, you can see it actually if I really zoom in. So I had my stop in at 99. My stop triggered here, and you got to get out. You know, you got to get out, right? So if I'm buying the break of these short sellers and I'm not getting a squeeze, and what happened, I remember it, when I bought 03 here, because the 02 sellers, short sellers broke, the uptick was like to 07. So not enough for me to even make 10 cents on it, which is what I was looking for. I think I had an offer at 12 or 13 cents to try to make 10 cents. I think you got a quick pop to 07 off a very mini short squeeze. And then right away, those short sellers came in at 07 again and started driving it all the way down. And I'm saying to myself, oh crap, the short sellers are really going after this thing. It's really heavy. I gotta, get myself stopped out, because as much as I'm looking for that short squeeze, if that short squeeze doesn't happen, this is and the market's viewing this as a terrible earnings report, and this thing breaks $12. I know that the low ended up only being $11.96. It easily could have been $11.20. I gotta stop myself out. I can't bag hold this thing if I'm not getting the short squeeze that I'm looking for. The reason for the trade that I'm there for is not happening. So I got to get myself stopped out and not potentially be involved in this on this break at $12 if they really snap this thing all the way down. So I get stopped out. My $11.99 stop triggers here, and you can see I got stopped out at whatever this low is. 97, I think, is where I got stopped out. It's not letting me put my mouse exactly on it. So I got like 2 cents of slippage on it. The first thing I noticed, though, when $12 broke, is that the reaction wasn't massive. I'm sure that you guys have all seen when like a figure breaks. A figure means a round number. So I'm sure you guys have all seen like when a figure breaks on something like this. I know we saw it in PayPal a bunch on the way down, especially after its first earnings report kind of came out there. That sometimes it just leads to just a waterfall of selling. And it almost should. Like the break of 12 here really should have had this stock going down all the way to like $11.80 almost immediately. There should have been like an almost immediate move to $11.80 on the break of 12. And the fact that it actually only went down 4 cents on that is actually notable, because it's not going down as much as it should. Why? Well, the sellers aren't selling, or the buyers are coming in and buying, something like that. So that's notable, but at the same time, I can still see in the tape the pegging short seller staying inside offer. So it was the same thing here. The low is 96, short sellers come to 97. At first, my buy stop was actually at 12.01, and then I'm like, all right, short sellers are here at 97. I'm going to put my buy stop at 98. And so what's going to happen here? Inside bid is 96. Long sellers are hitting 96. Inside offer is 97. That's where the short sellers are. One of two things is going to happen. Either the bid at 96 is going to break and the stock's going to keep going down, and that's fine because I have no position, right? Or the 97 offer is going to break where the short sellers are, and my buy stop is going to trigger at 98, and it's the same exact equation where I'm looking to squeeze these short sellers that I know just shorted at 97. And on top of that, I know that short sellers sold a lot of stock really from 10 cents all the way down, because I saw that. So I'm thinking to myself, okay, great. What I need to have happen here is, again, markets work in feedback cycles. So I need a feedback cycle where the first set of shorts that are out of the money buy back stock to squeeze the next set of shorts that are out of the money. So, in other words, 97 short sellers just break. I buy 98, 99, figure, whatever it'll give me. I ended up getting all my liquidity all at one price at 98, which actually can be a little bit scary because it wasn't a small buy that I did there. I got to get this thing past 12.01. Why? Because when $12 broke, there was a lot of short selling that was happening at 01 on the inside offer, and a lot of that got taken. So if I can have this, and this is literally how feedback cycles in the market work, if I can have the short sellers who just shorted at 97 and are now out of the money buy back enough stock to get it above 12.01, now the short sellers who shorted at 12.01 begin to get squeezed as the stock goes higher, and they can then trigger the short sellers who are now out of the money who shorted at 12.03, who can trigger the short sellers who are out of the money at 12.05, etc. Now, this is still going to be a counter trend trade. And in counter trend trades, I tend to be much less greedy from a game planning perspective than I am on with trend trades. You know, my target here was really just to move to the ADMA, and I had a game plan here where I basically, you know, sold 50% of my position pretty quickly for like a 10-cent profit or so, and then the other, you know, the remainder of my position I pieced out of, you know, 80% of my total position basically by the time the stock got to the ADMA, because it's still a counter trend trade. And it's still a company that I don't like. I'm just utilizing the ability of a thicker stock here that's circuit broken, where I can read that there are short sellers coming in, to basically have a day trade. And it's kind of an old school type tape reading type trade, which, and I kind of get nostalgic about that. I like that kind of stuff. And it was just and it's cool because, you know, I get traders all the time who ask me, like, hey, Derrick, you know, like, I can never find trades of small cents risk. And I know a lot of what I talk about in morning meetings is daily charts, because that's all I have at that time, right? And I'm talking about, like, hey, you know, like, you could buy, you know, this price or whatever, and you could use a stop loss down here, and sometimes that's going to be 20, 30, 50, 75 cents worth of risk. And I know that people a lot of times want to be able to find that trade that's going to be 20 cents risk or less. And they'll say, hey, I can't find any trades that are 20 cents risk or less. Well, this trade was 3 cents risk. Bought 98, stops at 95, right? The 97 short sellers break. I get filled at 98. My sell stop goes in at 95. It's 3 cents risk. If I get stopped out, I lose 3 cents on it. If I don't, well, you know, even eventually with this trade, and you can see my trailing stop here actually finally triggering at the end of the day of the remainder of my position, because once I sold what I wanted to sell, I'm going to hold that smaller percentage of a counter trend trade just in case this retracement higher has become a full reversal, and maybe I've got stock at $14 and it gives me a really good risk reward or whatever it is. I'm going to continue to do that, but it's also a counter trend trade in a company that I don't like, so I'm going to sell some. But this is an example here where, you know, 3 cents risk, I mean, just to this high right here is giving you almost 70 cents worth of reward. It's a really good risk reward. Let alone if the market didn't get trashed and this thing could have held up and I could have held a percentage of my position, and, you know, maybe this thing ends up working its way higher and pulling a Robin Hood and filling the gap and getting back up to $14. That's a realistic scenario, even if it's a lower probability scenario. And then next thing you know, maybe I took a trade here for 3 cents risk that's giving me $2 worth of reward. And again, that's going to be just a fantastic risk reward on the trade. So yeah, so I guess that kind of, you know, summarizes my day, and I wanted to go over this because I know one of you guys who was involved in the stock today emailed me about it. I know a bunch of people are looking at it, and I was talking about it a lot off the open. I don't do as many of these types of trades as I used to. kind of earlier in my career, I do a lot more of the bigger picture stuff, just kind of with where I am in my trading in my career. But it doesn't mean I'm not down to do this in certain situations when it arises. And it's not a situation that arises all the time either. I like specifically to do this type of trade in thicker stocks as well. I don't really like doing this in expensive stocks that have wider spreads, where that buy stop is going to give me a lot of slippage on that entry, and then that short seller comes back in, and the next thing you know, I'm losing a little bit more than I kind of want to. So those are the things I did well, and the things I did poorly today was definitely, I didn't hedge myself when I saw the opportunity to actually do it. So that's all I got for today. I actually just remembered it's Thursday, so I have a cutoff at 5 o'clock. So I went pretty long here. So I am going to try to answer questions. Viral, I know you said at Josh, but I think that you probably trying to come to me on that question. Oh, hold on. Let me see what Josh said here. I just want to start with questions that are related to this little lesson I just went here on Palantir, and then I'll go back and look at other stuff. Josh saying, when you do a market order on a circuit broken stock, does your order become the offer? No. A market buy is just going to take the offer. And that's exactly what I'm doing here. It's a market buy. I'm just bam, just taking the offer. And then, are you talking about on the like if I wanted to short sell using a market order? Got it. Yeah. What Viral said. I usually find that when I am doing a market sell order in a circuit broken stock, it kind of just sits on the offer, and I tend to not get filled, and it tends to not work really well. But that I don't really ever use that as an order, to be totally honest with you. If I want to short a circuit broken stock, I'm not going to be the guy who's pegging the inside offer almost ever. I'm usually trying to take a technical short based on a snapback to a certain area or kind of something like that, where I'll come in as a limit order on the offer to actually get short. All right. I don't have a ton of time here, but let me scroll up here in the VTF to try to take questions in the order in which they kind of came in. I'll just do it as much as I can. Gabriel, is this the most eventful earnings season ever? It certainly seems like it. It's up there. From Chinggis, can you please give some feedback on capitulation signals intraday and price position on the daily? I'm not sure I understand the second part of that question. I noticed sometimes there might not necessarily be a hammer, but it could be a red bar with high volume followed by an inside candle. So that's another one that I look for. Either spinning bottom, I'm not familiar with spinning bottom, or inverted hammer. I don't really like that as much. And it goes after that. I also understand that liquidity points are important at a time of capitulation, such as Cliff today, CLF, with two capitulations at 10.50 and 15.10. 10.50 and 15.05 into 15.10. Yeah, so two patterns that I like to actually come in on counter trend trades are hammer capitulation candles with maximizing volume and a high volume negative Maribozu followed by an inside note. So that's definitely two things that I look for. You want to have the volume, because volume is confirmation. You want to have the downside extension, because it's the downside extension that's really where the reward comes from on counter trend trades. If you don't have the downside extension, then you don't have the reward profile to actually take the trade. My preferred setup in that scenario, and let me take a half step back. As a general rule, I greatly prefer to trade with the trend than to trade counter trend. You just have much better risk reward profiles on your trades. Doesn't mean I don't ever It doesn't mean that I don't ever take counter trend trades. I obviously do. But my preferred setup is hammer capitulation candlestick on maximizing volume, or sometimes it's the candle right before it that has the highest volume there. And I'm always looking at the indices at the same time. I'm never not looking at the indices, because the market itself is such an important layer of probability. If I can see that, you know, my Q chart here happens to be, you know, putting in this type of candle right as I'm looking to go long, or that this inside 5 and up just happened right as I'm looking to go long a stock, then I feel like I'm going to have a little bit of a higher probability of success on the trade, because I know that the market's on my side. Always, always, always be looking at that. Dropbox is reporting a buyback. What's Dropbox doing after hours here? Doesn't look like it's doing too much. It seems like a lot of companies this earnings season are starting to post pretty big buybacks, and I love to see that. Dropbox added to the list. Add it to the list. From PS. Hey, good to see you here. I haven't seen you in a little bit. Isn't the number one issue is too many people were long too many stocks with ridiculous valuations? This is liquidation of that. Maybe. Maybe. The real question, I think, is, did we hit a point with some of these stocks as far as the percentage pullback goes where everybody who was going to sell already has? You know, if you're sitting 50+% out of the money on some of these growth stocks, and you haven't liquidated that position by now, that might mean that you're just with that position to the death. So that's one of the things that I'm paying attention to. And the reason I typed up Robinhood here is I thought that the Robinhood case was really interesting, because a lot of the times I've seen over the course of my career that at least it's a short-term bottom, when these stocks have just been getting obliterated, and that next stage of bad news comes out that should further obliterate the stock, and the stock doesn't go down. And that's what we saw with Robinhood on its earnings report at the end of January, right? You know, forget about this bubble top here at $85. Just going back to the IPO price, which I think was 38. Stock went from 38 down to, coming into its earnings report, $11.50. Earnings report comes out, stock gaps down from, you know, $11.60 of a closing price or so down to $10. The earnings report was abysmal, I thought, and the stock had like a 30% intraday move and closed nicely green on the day, and that led to 2 days worth of follow through on abysmal numbers. So maybe, just maybe, the people who were gonna liquidate growth positions because they're losing money on them have done it by this point, and the people who still have stock are just kind of in it to the death, or not. So I actually don't. Yes, there is absolutely still room for valuations to compress more. I know one of the big bank analysts is calling for forward PE on the S&P to work its way down to 18x. And we got to, I think, just below 20 at this point. And I don't remember when I read that report. I think it came from Pat's note. I think it was somewhere in here a week or two ago. But basically, you know, an 18x PE multiple would have had the market go down like another 10% from whenever I read that report that Pat had posted. So I don't know, what's another 10% off $440? So there is definitely still room for further multiple compression. My personal take on that is I thought it was a little bit more fundamentally bearish than is the case. Just and my thought process on that is, even if we do get the Bullard case here of getting the interest rate hikes that he's looking for, let's say even if the Fed funds were to go up to 1.25%, 1.5%, historically, that's still very easy monetary policy from an interest rate perspective. And I know that could be further worsened by the balance sheet runoff stuff. But I would think that at an interest rate that's set at, you know, somewhere between 1% and 2%, that you could still have multiples that are a little bit higher than the historic average. But again, that's just like fundamental thesis type stuff. At the end of the day, it's going to be the price action that will confirm whether any of those theses are correct. So thanks for the question there, PS. Good to see you. All right, I got Rich here with questions. Man, don't have a ton of time. I'll do my best. I have 2 questions today. Palantir took 3 cents risk and was talking about it being circuit broken or something. Can you please explain that? Cool, we covered that one already. Also, what was the tape reading you saw the person shorting was gone? Covered that already. And you stated a buy on AMD at 1020. Yeah, I've still got my charts here with my executions up. Yeah, you can see where I bought AMD with the green dot there. I bought at 1030 on the doji. So you basically bought. So there was an inside 5 here that broke up. This was also a doji here. I was buying on the 1025 bar, but it was off of the 1020 candle. And why did I buy? So downside extension. You know, it's 1020 here, and the stock's extended on a 5-minute chart. That's a lot. With that said, it's also trading as a secondary to NVIDIA, which was getting totally smoked, but was also really extended off of its earnings report. But if I didn't have all 3 of these things, I would not have taken the trade. If I didn't have downside extension, I would not have taken the trade. If I didn't have the highest volume candle of the day, or at least very much relatively high volume for how it was trading, I would not have taken the trade. And if it wasn't for the shape of the candle here being not so great, but still a hammer, you'd like the tail to maybe be a little bit bigger. But if I didn't have the shape of this candle, I also would not have taken the trade. I would not have taken the trade if I didn't have all 3 of those things. Honestly, my pricing is probably a little bit lucky. And also the fact that I didn't get stopped out with getting that pricing is probably a little bit lucky. Because if I just wasn't paying close enough attention to it. I probably typed this stock up because one of you guys mentioned the VTF. AMD wasn't really on my radar bar to bar today. So somebody probably made a comment about AMD, and what I do as a practice, and this is a great practice that everybody should do, is whenever you see anybody in the virtual trading floor mention any stock, you should do your best to type it up and see what's going on. That alerts you to potential opportunities in the marketplace. So if it was on my radar the whole time, I probably would have gotten a worse price because I would have bought the thing as soon as this bar closed off of the low. But I wasn't watching it right away, and it traded back down. I looked at it, and I was like, ooh, like I could buy off this candle for really small risk. And I do have all of the makings of an upside retracement off of this candle. But the fact that it's actually going back down to near this low means I probably have a pretty low probability of success. But the flip side of a really low probability of success in this situation is the price that I'm able to get. Trading a $113 stock that's already had a $4 range by 1020, and I'm getting 20 cents worth of risk on it versus this low. Quickly covering my risk, quickly taking off a little bit more, kind of piecing out of it on the way up, and then I kind of, kept the remainder. Really, I should have been getting out here, and then I realized that my stop somehow got canceled, and I just manually liquidated the position. But even with losing a little bit more on my remaining piece than I probably should have, I still was able to be, green in the trade because I booked enough on the way up. So hope that helps. Would I have shorted against the 950 Maribozu in the SPYs? I don't really utilize Maribozu candlesticks as execution for trades. It's more kind of information for me. For me, the better setup was the bear flag type pattern that was coming into the marketplace. And if anything, I wouldn't have wanted to do it on this candle, because if I'm shorting it on the 950 candle or after the 950 candle, it's too extended. I don't like buying stocks that are extended to the upside. I don't like shorting stocks or markets that are extended to the downside. This is too extended. So maybe there's enough momentum where it just continues to drop, but a lot of times it actually means that there's going to need to be time or price correction. If this was a price correction, this thing could have snapped all the way back to, 42.60, and that's actually kind of what I was looking for initially when the snapback started, because at the time of the day I thought we could get a 15-minute correction. We didn't, and that's how weak the market was, and that's what I was commenting on in real time. But that weakness in the market is actually what created this more bear flag type pattern, and that is what I would actually really prefer to short on. I don't like shorting extended markets, though it's probably easier to short an extended market than it is to buy an extended market. Cool. I'm really out of time here. I'm late for the meeting now, but it's an internal meeting, so if they wait a couple minutes for me, so be it. Today I saw a massive bid on Facebook at 210. Doesn't necessarily mean anything to me. I think it was 750. I don't know what you mean by 750, and the rest were like 1 to 20. Oh. So 1 is 100 shares, 20 is 2,000 shares, 750 is 75,000 shares. So 75,000 shares matter for Facebook, not really, because it traded 38.5 million. So we want to look at size in comparison to the average volume which it trades, and for the most part, I find size in the modern market to be more noise than anything else, or possibly the extent that I really care about size in the marketplace is that it can be a liquidity point that I can use to enter or exit a position without slippage. I honestly think that seeing 75,000 shares in Facebook on the bid is more noise than anything else. But right when that broke, it continued to sell off. I think you've mentioned you generally view large bids like that as extra information rather than conviction. That's right. But in this case, the bid was so massive it really wasn't. That I'm wondering if this is an exception and it's a safe bet that there will be continuation. Now, I don't want you to overread that information on it. A lot of times those round numbers, and you can actually see here, there was a nice little bearish flag type pattern above that 210. So you could have utilized that liquidity at 210 to execute this bear pattern for trend continuation. That would actually be a trade that I would like for downside continuation. But I would just be very cautious in overreading size. Mr. Trees wants to know what news service I use to get the headlines. The virtual trading floor, Mr. Trees. ProDesk virtual trading floor. Check it out. Patrick does a fantastic job getting the news in there extremely, extremely fast. I honestly think that the price of the virtual trading floor, that you achieve more than the value of the price of the virtual trading floor if you're a subscriber to it, just from the news of the option flow that Pat posts into the VTF. And that's before you get into any of our meetings and commentary and anything else. I do not personally trade futures. And your question is would it be easier to trade S&P futures versus picking stocks? I can give you my opinion on that. And I know plenty of successful futures traders, and that's their focus. My opinion on futures versus stocks, I prefer to trade stocks, and I'll tell you why. Most people I know who trade futures, they trade a very limited amount of products. They trade the E-minis, they trade the NASDAQ, maybe they trade oil, gold, natural gas, and for the most part, that's it. I find that to be very limiting. There are some days, such as the last couple, where I wake up and I'm doing my morning research and I look at the S&P and I go, I don't have an advantage. The S&P looks like a coin toss to me today. And if I'm limited because I'm a futures trader to trading those specific products, well, what am I going to do? I got no advantage trading the S&P. Am I going to force trades? Am I just going to not trade today and give myself the day off? This is where you have an advantage being stock focused, because there are thousands of stocks that are listed on the New York Stock Exchange, NASDAQ, and Amex, which is what we, as professional traders at T3, have access to. So if the S&P is giving me a coin toss, like it has recently, we can focus on stocks that had news, reported earnings, whatever it was. That's going to lower their correlation to it's going to lower the correlation to the market and give me something that I can focus on. Planet Learn, you're just allocated that dollar amount. So you know, if you had 100,000, you'd have access to 800,000, and you can put that 800,000 out as you want. You can take 800,000, put it out long. You can go 400,000 long, 400,000 short. But those are our T3 standard leverage ratio numbers. So if you are someone who is very hedged and having a long short portfolio, you can get access to more capital as you build a relationship. All right, guys, I know that there was a couple other questions in here. I apologize. I'm 6 minutes late for a meeting, so I'm gonna jump. But I hope that we got through some stuff here so that everyone can learn. And I guess that's all she wrote. I hope everybody survived today okay. I lost a little bit of money today. Luckily, some good day trades helped pad my negative P&L today. But it's part of the business, and it is what it is. And I definitely had a little fatal error in not hedging myself and getting short the market a little bit. But it is what it is. I'm having a great week overall coming into today. Have a great night, everybody. I will see you all tomorrow.